Hey guys, welcome to Stefan Livera podcast, episode 4. And for today, I've got a really fantastic guest. I've got JW Weatherman. So welcome, JW.
Yeah, thanks for having me, man. I'm looking forward
Yeah,
to chatting today.
awesome. So I'll just give JW a quick intro for the listeners. So JW Weatherman, obviously this is his pseudonym. But he is a software security expert who has come into Bitcoin now. He's the writer of the Bitcoin threat model. He's a podcaster and content creator within Bitcoin. And another one of his projects is mathbot.com, which is basically a project that tries to create online education in terms of teaching math and teaching fundamentals of programming to children or adults as well. And the reason I wanted to get him, JW, on today was basically to talk about why Bitcoin and not the others. So I think what we could do is maybe let's start with some of the positive reasons in favor of Bitcoin. So JW, did you have any comments to start with on that point?
Yeah. I think the best thing that's in favor for Bitcoin is probably just understanding how open source software works. So open source software is very collaborative, and it's not like Microsoft versus Google, right? It's all of the smart people working on the problem working together. And even if they're working on a different project, like even if let's say they forked the open source project and they're working on their own thing called Fredcoin. The natural thing that happens is that if Fredcoin does anything useful, then the Bitcoin guys would pick that up, right? So there's nothing hidden in open source software. Like every useful thing that's done is exposed to the whole world, and everybody is free to copy the things that are useful and continue to collaborate and build something better. And that's why if you look at something like databases, there tends to be a small number of databases, right? You have something like SQL Server or MySQL, or SQL Server is a bad example, that's closed source, but something like MySQL or another database. But if you want a SQL database, you tend to use MySQL, right? And maybe there's one or two other ones that are popular, that are playing around with something kind of interesting. But this is even worse if you look at something like a protocol, because the whole idea of a protocol is like a language. It becomes more useful the more people that use the same language. So something like Bitcoin in an open source context, it's probably better to compare that to something like the internet protocols like TCP/IP. And the way that works is if somebody had an idea to make the internet protocol better, they might fork it, they might screw around with some stuff to experiment, but if they do anything useful, they want to get it into the standard because everybody's using that same thing to communicate. And really, money is a protocol. Money's always been a technology since before we really used the word technology to solve specific problems that humanity is facing in coordinating trade. So all of this combines together to really work for the benefit of the leading project, right? Because if anybody does anything useful, it's going to have a tendency to be there. So hopefully that makes sense. But I think overall, that's the reason that that Bitcoin is special, because it's the first, it's the biggest, it has the smartest people working on it, has the most people working on it, and this is all open source. So it's really basically impossible to have a competitive advantage.
Yep, fantastic point. And I think from an economic point of view, we can look back to some of the writings of Carl Menger, such as his essay on the origins of money. And in that essay, he basically presents this argument of money as the most saleable asset. It's, in other words, the most liquid asset. And it makes sense that as soon as one money kind of starts to get found, it kind of has that reflexive nature that pushes it to the top and pushes everything else down. And I think the points that you were making there, JW, were fantastic in terms of the network effects around that. And I think particularly what you were referring to there is often around the developers of Bitcoin. And what we find is that really the best developers, some of the best developers in the world, are working on Bitcoin, and they're working on Bitcoin core development at the protocol level, and then you've got other guys who are working on the wallet software and other ways to integrate it all together. Some other network effects that we could talk about are in the examples of exchanges. So notice how most of the exchanges are basically Bitcoin is the reserve currency of the crypto world. And so even if they offer fiat to other altcoin pairs, the volume on those is terrible. So anyone trying to move a large amount of coins would end up moving the market when they try to move a large amount of coins. And so these are kind of all tendencies that point us towards use of Bitcoin. Now, JW, you've made a good point in the past with your comments around proof of work mining. So maybe you want to comment a little bit on how that is another factor and another network effect in favor of Bitcoin.
Yeah, I think what's going on with many of the competing currencies, many of the altcoins, and I do completely agree, incidentally, about the most saleable asset point that Menger makes. I think that's an effect of what money is, right? We're trying to come up with, I have chickens, you have goats. You don't want chickens, I don't want goats, or vice versa. And we're trying to come up with a third thing that we can use to facilitate that trade. Well, the more that third thing gets used, the more valuable it is to use in trade, because the more people will want it, the more people will tend to have it and be willing to give it away. And if you understand what money is, like if you understand the reason that a civilization adopts money, you understand that it becomes the most saleable asset, because that's the whole purpose of adopting it, right? The whole purpose of adopting it is to facilitate trade. So it's this interesting evolution that we see happen in all different civilizations as their economies advance, and you don't end up with multiple monies. That's not money. That's called barter. We have one small exception that really confuses people. Well, a couple. One is silver and gold. But the only reason we had silver, and that was, in a sense, a step back towards barter, is because gold was too precious. Another way to say it is it didn't subdivide very well. When you want to buy a can of soda, if you're trying to scrape off with your fingernail the appropriate number of micrograms of gold, it just doesn't work very well, especially given that they didn't even have scales that could measure micrograms back then. So they used silver, but that was a step back towards barter. It was a bad thing. It was a compromise. And that's why banking became such a big deal, because it allowed us to get rid of silver and deal with gold's limitation in being subdivided. That's one point. The other point that I think people really get hung up with when you say something like the most saleable asset is they look around the world and they see that there's tons of competing currencies right now. But what they're failing to realize is that's not a result of market activity. That's a result of the threat of government violence. If I could, all of my contracts would be written in something other than US dollars, probably. I would certainly pay all my debts in something other than US dollars. Maybe it'd be gold, maybe it'd be Bitcoin. I'm not sure. But I don't, as a US citizen, have that option. If I tried to write a contract in Bitcoin, it would be enforceable in US dollars. If I try to write a contract in gold, there's actually a government mandated exchange rate of dollars to gold that makes that impossible, right? So there's all these rules that are, there's a guy with a gun saying you can't do these certain things that puts us in a place where we use currencies like, you think the guys in Venezuela want to use the bolivar right now? No, they don't, but they're stuck with it because of the threat of government violence. So if you take that out and you look at history, you do realize that we had a tendency to use gold, and silver was kind of a stopgap, and it wasn't ideal, and it caused a bunch of problems. And so we are working to get back as an economy, right? As a global economy, we'd much rather have one thing, which is that most saleable asset. But as far as exchanges and that network effect, I think that is I think that's another way to look at it, and I think those are all also really good reasons that we would have a tendency to use one thing. And I think with the proof of work, what's going on is that basically there's a misunderstanding about the purpose of proof of work and what it does. And if you're trying to sell a scam coin, it's a really good idea to take advantage of that technical misunderstanding of the purpose of proof of work in order to encourage people to mine it, which encourages people to own it, which is basically dumb money marketing, right? So the purpose of proof of work is to consume electricity um, because electricity is a real world asset that people value, to prove that you've consumed electricity so that you have skin in the game when you're confirming a set of transactions or when you're forming a block, so that if you do something that is not legitimate, like you try to include an invalid transaction and the network rejects it, you have become poor, right? So it's a security mechanism to punish miners that don't behave. And on the other side, it's a mechanism to reward miners that do behave by mining valid blocks. So you want that to be at the height of human capability. Like you want to burn that electricity as efficiently as possible. And what all the altcoins do is they say, oh, we're going to do something that is less efficient. And somehow that's going to be good for security, right? They claim it creates more decentralization. But all it really does is make the network that much easier to attack. Unfortunately, the misinformed get really excited about being able to participate in this stupid scam. And it is a good marketing tactic. So,
yeah, great points. And I think one point to add there is just around, we're now starting to see some attacks on some of the coins that have a weaker hash rate, or they've tried to do something complex and have a bit of a hybrid mechanism of, combining proof of work with some other thing. And what happens then is we end up with attacks being performed and double spend attacks performed on other chains. And this has happened, I believe, on Verge Coin and some others. And what this does to the market is it provides less surety in the coin. And it means people, if it gets attacked, well, then why would people want to store attacked in such a way that you can't use it, or attacked in such a way that there's inflation? Well, then why exchanges now don't want to list that altcoin, or people feel less comfortable to store value. And I think that's a good point that you were sort of talking around there just then, JW, as well, is the importance of having efficient production of hash power such that people feel that credible commitment and that comfort to store value.
Yeah, I mean, if people understand what's going on, they will realize that what they really want is they want the maximum amount of electricity to be consumed in the most efficient way possible in confirming their transaction. And the reason that they want that is that it disincentivizes the attacker, because the attacker that wants to do a double spend, that wants to steal their money, needs to spend money on electricity in order to do that. And if he can spend money on electricity 10 times more efficiently than the honest actors in the network, then he can attack the network by spending 10 times less money. And that's not a good thing, right? You want it to be as expensive as humanly possible to steal funds or to attack the network in a way that allows you to steal funds through double spends. So that's why it's so important that we don't try to create coins that are, quote, ASIC resistant. Because ASIC resistance, a better way to say ASIC resistance, which ASIC stands for application specific integrated circuit, but it just means it's a computer that's specially designed for only this one task, which means it's like a roofing hammer versus a regular framing hammer that you can use for everything, including roofing. It's specialized, which means it's better at that particular task than anything else that is not designed for that particular task. So we want that because we want that electricity to be burned as efficiently as possible, because we want the attackers not to have another way to burn the electricity any more efficiently. So if whatever the network is using is at the height of human capability, so if you look at Bitcoin, we're running stuff that's around the 10 nanometer range. That is the height of human capability. It is systems and machines that are designed to solve this problem, to burn this electricity in the most efficient way that we know of. As far as we know, there's not even any alien technology out there that can do this more efficiently. That's what you want. You want that to be what's protecting your network, because then that's the only thing that's available for the attackers to attack your network. And then the incentives work out pretty well, where it's more cost effective to defend than it is to attack. But if you take the approach that these altcoins have taken and you sell out your security because it's good marketing spend, then you're a short-lived scam, and eventually you're going to suffer the consequences, like all of these coins have, eventually, and will continue to.
Yeah, great points, JW. So that's kind of comments on mining in terms of which algorithm we use and what, proof of work, so on. How about now mining from a centralization and decentralization point of view? I think it would be fair to say that Bitcoin's mining is more decentralized than the others because we've got more full nodes running and we've got more miners that are geographically distributed, though there could be some improvement. But do you have any comments on mining decentralization compared to altcoins?
Yeah, absolutely. So the real issue here is that you don't really want decentralization. What you want is security. And decentralization is a tool that allows you to provide some security if it's done properly. So I'll give you an example of a way that you could have decentralization and not have any security. Let's say that you come up with a mining algorithm and you don't write any software to do the algorithm. You just have a step-by-step guide in a document, and you tell people to use pen and paper and solve for blocks. Now, I'm a little hesitant to even suggest this because I think there's probably going to be an altcoin in the next week called JW Coin that somebody's going to be marketing. Because this is a really stupid idea, but it would probably appeal to a number of people. And the reason for that is that it would allow anybody to grab a pencil and a piece of paper and that would be the maximum capital investment required, and they could start solving this math problem to verify blocks. And if they solve the math problem and they submit it to the network, they could get rewarded with these retardo coins. The problem is that would be extremely decentralized, right? It would be no barrier to entry, right? Anybody with access to a pen and paper and an internet connection could immediately be helping to secure the network in theory, right? But the problem is that even if that was decentralized, it could become immediately centralized. It could overnight go from the most decentralized network with people all over the world with pen and paper to one guy that took their time to write the code to actually solve the math problem on his MacBook Pro, right? So it's not enough to be decentralized to have security. You need to be decentralized in a way that you can't be easily centralized, right? In other words, with all of the hash power that a bunch of people could be doing with pen and paper, it would pale in comparison to what you could do on your MacBook Pro. So let's say that you had 0.00001 hashes per second happening, something like that. But then I write the code and I run it on my MacBook Pro, and now the network has 1,000 hashes per second, and I own 999.99 hashes per second. Then I've immediately centralized the network in one fell swoop, and that's not good, right? So it's not enough to be decentralized. You need to be decentralized in a way that is very expensive to create overnight centralization. And that's the problem with any of these coins that are attempting to be ASIC resistant is somebody creates an ASIC and then the next day you're no longer decentralized and the attacker has control of your network.
Yep. And then in that time, they might need to, again, once they start changing the proof of work algorithm or changing the algorithm that secures the network, then it takes time for the creators of the mining hash power equipment to go and make efficient technology that works to that. And as you were saying, then they would not be at the limit of human ability. And so, again, we're kind of falling back into that same problem. So it's for good reason that, a proof of work change or a change to the algorithm should be, people should be quite skeptical of that. And it should be quite a process before that occurs.
Well, so let's look back at the guys with paper and pencil, right? There's some things that are great about that anybody can have it, and there's lots of people all over the world that are doing that. And the reason that that's valuable from a security standpoint is that if somebody wanted to come to everybody's house with a gun, or they wanted to go after all the miners with a gun and say, you're going to ignore these transactions or you're going to include these transactions, that would be very difficult because all over the world you have people with pen and paper and you have to try to track down where these people are at and attack them all at the same moment, right? So that's the upside of that approach. The downside is that they're not working at the height of human capability. So what we really want is we want we want both, right? We want people distributed geographically, and with administrative distribution too, right? It doesn't do us any good if we have computers all over the world in different locations if they're all controlled by one guy, because then the guys with the guns just go get that one guy, and it doesn't really matter.
Yeah.
So we want administrative decentralization. We want geographic decentralization, but we have to have the mining happen, like you said, at the height of human capability. So what we really want is we want ASICs that are commoditized. As you march closer towards cheap, available access to the computers that can operate at the height of human capability, that's your march towards security. So something like a proof of work change that you're referencing on any of these coins is an intentional and very deliberate act to weaken the security of the network. And that only makes sense if you're a scammer.
Yep. Good points. Okay, so let's now talk a little bit about some of the financial components of the network effects that are working in favor of Bitcoin. One example of this would be futures. Futures are currently only existing for Bitcoin on CME and CBOE. Do you have any comments on that?
Yeah, I think that over time we should expect that that the old financial network, the old financial system, is going to begrudgingly probably accept more and more of the new financial system. I think eventually, this is a little bit controversial, but I think eventually, in spite of all of the scams and the ICOs, we will see stocks and bonds and other financial assets fully digitized, and we will see people authenticate their ownership of those assets through a private key. And I think that it only makes sense that those things are going to be on the most secure network available. Just like, if you're building an application today, you build it on the internet because it's just the most, it just makes sense. I think in the same way, if you were going to digitize an asset, you would put it on the public blockchain, which is Bitcoin. So I think all of those things are going to happen eventually in spite of all the ICO scamming, because those guys are taking advantage of a grain of truth in order to sell a bunch of lies. But I don't think it's going to happen overnight. And I think it's completely fine that we still don't have an ETF, a Bitcoin ETF or whatever. I think if you look at what happened with the internet, there was a lot of negotiation between the old world system and the new world system. And eventually the old world system it either submitted and joined, or it just became unimportant. And I think that's what we're going to see here as well.
Yeah, great points. Agreed. And I think that sort of ties into the next point, which is around the fact that upper layers are being built on top of Bitcoin. So an example would be the Lightning Network or liquid assets or other proposals to tokenize assets, but the smart people are building on top of Bitcoin. Do you have any comments on that?
Yeah, I think it goes back to the internet analogy, the internet protocol analogy, or really any open source software that's on a protocol. If you actually want to solve a problem right now, and you're not going to pretend to solve a problem. So let me give you an example of pretending to solve a problem. Bitcoin Cash, right? These guys said, hey, we need more transactions per second. So we are going to increase the block size and wait for it, a linear improvement in scale. So we're going to take a critical security parameter. We're going to monkey with that thing, and we're going to do it so that we can do double the transactions per second. It's absolute insanity when you're working on something that we expect viral adoption, and we don't want to go from 21 transactions per second to 42. We need to go from 21 transactions per second to 21 million transactions per second. So we're not going to jack with like a critical security parameter in order to get irrelevant scale. But if you're actually trying to solve a real problem, you're going to contribute to Bitcoin, right? In one way or another, you're going to build on top of that. Just like if you were trying to build any kind of application right now, you'd be building on top of the internet. If you're trying to build a financial application like Lightning that supports fast transactions, or Liquid that supports assets, you're going to build that on top of Bitcoin. There's just no reason not to. The financial incentives not to are really only if you're going after that sweet, dumb money. And unfortunately, we've seen a lot of that.
Yeah, good points. Good points. I think the next one that would be a great one to touch on is just the fact that of all the cryptos that exist today, Bitcoin is the most decentralized, and it has so far resisted all sorts of attacks. Let's talk about some of the attacks that Bitcoin has resisted thanks to its decentralization. Do you have any comments on that?
Yeah, I've gone back. So I'm relatively, I guess I'm coming up on, maybe I'm getting close to a year. I guess, well, not quite. Last November is really when I got super interested in Bitcoin. And so most of the attacks, maybe all of the attacks that really gave Bitcoin a run for its money happened before I got involved. But I have gone back and kind of looked at that history. Bitcoin Cash is definitely gave it a run for its money. That was, a lot of people know about this, but it was basically an attempt to increase the block size to a dangerously high level that would cause centralization. And that would be good for some people and obviously bad for the rest of us. And it kind of fell on the heels of SegWit 2x, which was also an attempt to increase the block size to a dangerously high level to cause centralization. I think that fell on the heels of, I'm starting to get out of my depth a little bit on the history, but Bitcoin Unlimited, which I think fell on the heels of Bitcoin XT. And I'm pretty sure there was something before that. But the pattern is all the same, right? Like there's been a concerted effort to increase the block size to a level above which we believe is safe as far as encouraging decentralization or maintaining the level of decentralization we think is safe. But there have been a couple new ones since I've been around that I think are interesting. I think
SegWit 2x would be a good one.
Yeah. So let's see. So Grin is one that's ongoing right now. Grin is basically an attempt to create a coin, and I've been hesitant to call it an attack. I think this is probably the first time. Maybe I've called it an attack once in the last couple of weeks. But the challenge with Grin is that it's based on something that's interesting. So Mimblewimble is actually an interesting concept. It has a lot of value in at least an academic sense, if not in in an implementation sense. So I think a lot of us have been hesitant to treat Grin as negatively as we've treated Bitcoin Cash. But really, Grin is just Grin is a less ham-fisted version of Bitcoin Cash. What Grin is attempting to do is compete with Bitcoin as money, which is going to slow the adoption of Bitcoin. And it's trying to do that by mixing some actually interesting stuff with some poison pills. And the poison pills involved in Bitcoin are basically two things. One is it's using an insecure mining protocol. So we talked about how we want the people that are securing the network to end up with commoditized hardware, right, that anybody can get access to for relatively cheap, that works at the height of human capability. What Grin has done, and what a lot of these altcoins have done, is they've specifically designed an algorithm that makes that difficult, right? That is ASIC resistant. So that's a big problem from a security standpoint. But if people are confused about that, they would tend to start investing in Grin and maybe owning Grin, only to find out eventually that it's actually not a good money because it's based on, it has a security flaw, which is its mining algorithm is designed essentially to be insecure. And then the other problem with Grin is it has a monetary policy that is very inflationary. In the year 2140, when Bitcoin no longer is issuing any new coins, or it's issuing dust, right? It's issuing tenths of a Bitcoin or something. Grin will still be issuing about 2% per year, which, if you believe the Fed, is about where the Fed is right now. So we have 120 years before Grin is going to suck less than the current Federal Reserve with the US dollar. So that's obviously not good and not ideal. From a monetary standpoint, right?
Yeah.
So I think Grin's an interesting attack. I think insecure sidechains are also an interesting attack. So there's been a few little things since last November, but really SegWit 2x was the last big hurrah, I think, and probably the last one that's going to have nearly as much chance. I think we're looking pretty good from here on out.
Yeah. But I think for people who are sort of new to Bitcoin and cryptocurrency, it might be good to just outline a little bit around what happened with SegWit 2x. Did you want to comment on that, or shall I?
Actually, go for it, man, because you probably were watching this closer than I was at the time, and have a little bit more intimate knowledge.
Sure. Okay, yeah, well, I'll just quickly outline a little bit around the SegWit 2x. So essentially, there was a bit of a debate, kind of, and all of the kind of Bitcoin XT, Bitcoin Unlimited stuff was sort of coming to a head around the middle of last year, to 2017. And people were basically coming to a point where they're saying, okay, fine, we're going to agree amongst the big, some of the big hash power, mining pools, and also some of the large Bitcoin companies. And they were saying, okay, fine, we're going to have SegWit and also raise the block size 2x. And so what happened over that time is that despite a large amount of the Bitcoin hash power supposedly, in quotation marks, signaling that they would move to the SegWit 2x chain, and despite many of the large Bitcoin businesses also saying, yeah, we're going to change over to SegWit 2x and we're going to change the BTC ticker to become the SegWit 2x chain. Despite all of this, Bitcoin resisted that attack. And the way it did so was through many people discussing with each other on Twitter and so on, and also through things like the futures prices. So at the time, some of the exchanges, such as Bitfinex, released a token, and they had B1X and B2X. And at that time, now I recall, people could basically trade in a BTC and convert it into a B1X and a B2X, which represented each side of the fork. And what happened is there was kind of like a market. And in that market, to my memory, I remember the price of B2X, as in the coin representing SegWit 2X, was 0.15, whereas the B1X coin was 0.85. And so you could see already from that, the market was not very confident in SegWit 2X. And there was even further that came to a head when it actually came time to try and do the fork. There was a problem with the software, and there was not a sufficient level of review of the code. And then Jeff Garzik, one of the people who was pushing SegWit 2x, basically had to try and quickly release some new patch. And there were miners who got stuck on an old block because I can't remember the detail, but essentially there was an off by one error in the code. So basically the reason I bring this up is just to point out that despite, large Bitcoin businesses and hash power, Bitcoin still resisted that because ultimately miners are kind of employees of the Bitcoin system, so to speak. The Bitcoin holders are the ones who kind of pay the miners, in a sense, in their inflation. And so they were able to resist that. And that's another reason that people can have confidence in Bitcoin's monetary policy, which kind of lines back to what you were saying there around Grin and their 2% monetary policy and other coins, which all have much more inflationary policies.
Yeah, absolutely. There's no question that the coin that is the most secure is going to win. Everybody recognizes that, right? Because something with the security flaw, we're pretty confident at this point that anything with a security flaw is eventually going to be exploited. So the question is not whether the most secure coin is going to win. The question is, can we, as attackers, deceive enough suckers? Can we get enough people that either lack the economic knowledge or the technical knowledge to understand what's happening here to buy our garbage before it becomes clear that it's garbage? And so,
yeah, great point.
I think that was always the play. I think the reason that, and again, I have the benefit of hindsight looking back, but I think the reason that those bugs were there is that nobody really took it seriously. Even the scammers, I don't think, took the SegWit 2x coin seriously. Maybe they would have if they had gotten some traction, but from day one, it was obvious that this was a security flaw to everybody, right? And because apparently not everybody, but say 85% of all of the investors could tell that this was a really, really bad idea. And it wasn't a new bad idea, right? Because it was like SegWit 2x was the fifth or something version of this idea. And there was some analysis, I think I saw some analysis that said that somewhere around 3 megabytes, we start to see more latency and more tendency for centralization. So SegWit 2x actually wasn't an increase from 1 megabyte to 2 megabytes because SegWit itself was an increase from 1 megabytes to 2 megabytes. But it was a doubling of the doubling. So it got us, I think Somehow it may have even ended up around 8 megabytes. But like I said, I didn't live it, but I know it was at least a doubling of the 2 megabytes in SegWit. So maybe it was 4 megabytes. But either way, it was above the only real research on the topic that had been published said, somewhere around 2, 3, it starts getting dicey. I don't think it was coincidental that they wanted to choose something that was above that safe threshold. Because if you could pull that off, right? If you own a lot of the hash power, let's say you own 50% of the hash power, if you can pull that off and cause enough latency in the network to where people that are not right next to you are not as profitable as people that are right next to you, which is essentially what we're trying to avoid, then you can end up with 100% of the hash power. And if you have 100% of the hash power, then you control the network and you could change anything you really wanted to about it in theory. But at the end of the day, it also illustrated something that I don't even think the attackers quite understood that you just said, and that is that the only thing that matters is what people want to buy. That's where the value comes. If I buy it, I hold it, I create a market value for it. I'm willing to buy more of it. And if somebody does pull off an attack, then that thing is going to be less valuable. So in the long run, it doesn't work, but maybe in the short run, you can screw over some people that don't know what's happening.
Yeah, great points, JW. That brings me to the next point I wanted to discuss, which is around the concept of affinity scamming, which is one of the ways people scam people in this space. So let me just quickly kind of define it and read from basically the Wikipedia page, and then JW, you can comment on that. So affinity fraud is a form of investment fraud in which the fraudster preys upon members of identifiable groups such as religious or ethnic communities, language minorities, the elderly, or professional groups. The fraudsters promote affinity scams, frequently are or successfully pretend to be members of the group. They often enlist respected community or religious leaders from within the group to spread the word about the scheme, by convincing those people that a fraudulent investment is legitimate and worthwhile. Many times, those leaders become unwitting victims of the fraudsters' ruse. Now, the parallel that we see in the crypto world is people who are well-known Bitcoiners will come out and become an ICO advisor. Do you have any comments on that, JW?
Yeah, I think this is definitely what is going on. In a way, I think that the affinity scam is just good PR, right? If you hire a really good PR firm, they'll help you segregate your target market. They'll help you figure out what messages are going to resonate and which spokespersons you should use for which subgroup. So in a way, it's very natural. But if what you're selling is not useful and it's actually a scam, then I think you could definitely label it, affiliate scamming or affiliate fraud. Affinity. And I do think that it's natural that this would happen in a sense, right? Like if you look, I like the reference to the religious community, because if you look at the Mormon community, if there's one thing that I know about the Mormon community, it's that multi-level marketing scams spread like wildfire in there. If you can get one of those things going within the Mormon community, you have a cash cow, because they're a tight-knit group. They have pretty close relationships. They're basically a network of people that's relatively efficient in communicating opportunity, let's say. So if you can get a scam in there, it performs really well. I think the libertarian community, in a sense, is in a way a religious group, right? It's an ideological group. And I think that what you've seen with some of these crap coins is that they have specifically targeted the libertarian community and sold them on their slightly correct, but ultimately wrong understandings of economics in order to get them to buy into things that are really bad ideas.
Yeah, great point. And it's a similar. So we'll see that in certain altcoins, and then we'll see that in terms of some ICOs and some other projects that get someone to be an advisor and just kind of, or they do partnerships, right? That's the other way that they all try to affinity scam. Yeah. So I think these are all great points. And I think the next section that we should do is let's do a little breakdown on some of the large altcoins and what we perceive as the problems in some of them. So how about EOS? Do you have any comments on EOS, JW?
Yeah, so EOS, I think the idea that it was marketed as was the Ethereum, like the Chinese version of Ethereum. A lot of these altcoins, I haven't spent a ton of time with because they're just such a bad idea. Like once you
Yep.
understand that money needs to be one thing and that people are going to have a tendency to select the thing that holds its value the most and is the hardest to steal, then the idea of like competing currencies, unless they can actually outperform Bitcoin, become really uninteresting, right? Like I don't need to know a ton about EOS. All I need to know is that it doesn't have a reasonable chance of competing with Bitcoin, and I know that it's a failure, right? So it's hard for me to get super interested in these things. The other problem that I've faced as a security researcher looking at these, that's kept me from being super interested in becoming an expert on any of them, is that if you look at the top 10 list, and I actually did do a top 10 review of cryptocurrencies back in November, and it doesn't even match the top 10 list now, right? Like these altcoins, these
Yep.
frauds, they have a very short life cycle, right? There's a big marketing spend, there's a big buildup, there's a massive influx of dumb money, and then there's a pretty rapid demise. I mean, it could be over a period of years, but when you're talking about the amount of money that's involved, years is not a lot. But yeah, EOS is essentially the idea of EOS and the idea of a lot of these things is it's as good as Bitcoin plus. So EOS is all about, like Ethereum, it's as good as Bitcoin plus you can get smart contracts on it. Now, how do they do that? At the time that they're selling the tokens, well, that's not important, right? What's important is that we have a sentence. I think EOS, maybe it was Tron. One of these guys even just copied a white paper from somebody else, did a quick find and replace, and even failed to do an effective find and replace and still raised hundreds of millions of dollars. So
Yeah, that's right. I think that was Tron. Yeah.
yeah, so these guys aren't they're not even taking their own scam very seriously. It's hard for me as a security researcher to take it very serious myself. But it
Yep.
is
Yep.
not that, right? It is not Bitcoin plus smart contracts. It is not a secure asset to begin with. And so it's not interesting whatever features they might have on top of it. Some people have called these feature coins, but you can't have a feature without the base layer, and you can't have the base layer without beating Bitcoin for it, because it's a winner take all game. That's what money is. So yeah, it's not a good
Yeah.
idea.
Great
And
point.
I think the market's finally beating the heck out of everybody that.
Yeah, I think essentially some of the problems with EOS is they basically sacrificed decentralization so that they could get high transactions per second. But as we were saying, that's you're giving up the game. I think the next one to look at would be Ripple. One comment I'll just make on Ripple is that this company, they issued 100 billion XRP tokens, and they own something like 60% of the supply. So when new people come in, they come in and buy XRP. They're basically enriching the founders and enriching Ripple.
Yeah, I'll comment on Ripple, but I do want to just mention that EOS, the way that you characterize that was far more legitimate than I think is reality. They did not make a design trade-off to get faster transactions per second, and oops, that compromised security. They, from the
Yeah,
beginning,
yeah.
had no chance of building anything of value. And it's very obvious to anybody with enough technical depth that they didn't even intend to, they didn't even try. So, these are definitely frauds. They're definitely scams. And if we had an effective justice system, these people would easily be convicted, right? It's not hard. Like the guy that built the thing that you set under your trailer that sends out radio waves and supposedly keeps mice from entering, right? Like he's in jail right now. But that had far more basis in science and possible truth than anything that the EOS guys were doing. So it's important to set that as a baseline. Like you guys should understand, these are not people that are experimenting and maybe will stumble across something wonderful. These are people that are not even experimenting. Like from day one, they are not investing heavily in development. All of their money and all of their energy is going into marketing and getting poor fools to be confused. So I think that's an important sort of backdrop for this stuff.
Yeah,
Now,
fair point.
the Ripple is a great example of this, right? These guys will present themselves as, we're trying to be the regulated token, we're trying to be the token that works friendly with banking. If you believe that, if you're not one of these crazy libertarian anarchist nuts that thinks that Bitcoin's going to destroy banking, we're the token for you, right? We're the token for the regular guy that actually thinks that Chase and Bank of America and the US dollar are still going to be here in 50 years. So it is an excellent pitch. But now let's look at the reality, and you'll see just how dishonest and illegitimate this thing is. So one thing to understand right off the bat is that there's two things happening here. There's a consulting company called Ripple, and then there's a token called XRP. So the scam is, and the way that it's been executed pretty effectively, is that the consulting company will do something and then make a press release and confuse people to think that there's something happening with XRP so that the price of XRP goes up. I'm going to give you the quintessential example that they pulled off. The consulting company made a deal with BBVA. BBVA is known in the US as a bank that has a tendency to do a lot of pilots, a lot of experimentation. Almost none of it goes anywhere, but maybe it's part of their marketing strategy, or maybe they legitimately are trying to be new and innovative. But they have a reputation for doing a pilot with just about anybody that has a story. Now, they don't actually put any skin in the game, right? BBVA didn't actually spend any money to make this happen. But the guys at Ripple, at the consulting company, they were able to get BBVA to agree to do a pilot. Now, this is not a live pilot. There's no real money involved. But the idea was that the Ripple folks in the consulting company were going to do some experimentation and show BBVA how they could do faster settlements. Now, nothing actually came of that, but the Ripple company was able to do a press release. And what the press release said was, Ripple does a deal with BBVA in order to facilitate interbank transfers, right? Boom, great headline. People are very excited. So what do? They go buy Ripple. But you can't buy Ripple. You buy the XRP token. Now, the XRP token is often called Ripple, but had nothing to do with the pilot. In fact, BBVA eventually let out a press release, or maybe it was just the VP that was in charge of the project, made an announcement and essentially said, look, we did a pilot with these guys. It didn't go anywhere. We do lots of pilots. There was no value in anything that the Ripple consulting company brought us. Now, that didn't stop the XRP token from pumping in value quite a bit. But that's exactly the kind of nonsense that we're dealing with here. And Ripple is one of the biggest, right? They're one of the most respectable, I think. And so yeah. I think it's really obvious that these guys are charlatans, right? These are not scientists that are working on interesting stuff. If you buy into it, you're buying into a Ponzi scheme at best. And you're hoping that if you're smart, you're hoping that the Ponzi scheme is going to be effective and you're going to get out before the house of cards comes down. You are not investing in something like nuclear fusion, which may or may not work, but if it does, is going to be wildly successful. There's no actual science happening here.
Yeah. And one other point I would add just to the whole Ripple thing is that some of their products use XRP as part of the product offering, and some of them don't. And the other thing is, one of their products actually is something to do, it's sort of similar to like correspondent like how banks would transact money internationally, right? Which currently the SWIFT network is in place for. And what has happened as a result of some of these cryptocurrencies and related projects is that SWIFT has gone and improved their game. So because it's all centralized anyway, why would they use your like Ripple's one when they can just use what they've already improved, the upgraded version of what they're already on? But anyway, let's move on. Let's now. So as you touched on this before, how about let's go into Bcash and how they're a bit centralized.
Yeah. So Bcash actually, I think it's finally over, right? I think it is. It's on its last leg. So if you have any Bcash left, now's the time, in my view. Now I could be wrong because the thing with scams is it's really hard to time when to get in and when to get out. And if you can time getting in and out of the scam well, especially if you're the guy running it or he's your brother or something, you can do better on a scam than you can do on a legitimate project. But that's the trick, right? Are you part of that inner circle that's doing the fleecing, or are you part of the outer circle that's getting fleeced? And maybe more importantly, if you have any ethics at all, are you going to be able to feel like a healthy, happy human being participating in these vile, wealth-destroying creations? So Bcash is, essentially just increasing the block size, right? They made an exact copy of Bitcoin, and they increased the block size by 100%, which was what SegWit2x was attempting to do. And then the only other thing that differentiates them is that they didn't include a security fix that was included with SegWit. There was a bug in Bitcoin called transaction malleability, which basically allowed you to change certain parts of the transaction. They weren't really critical parts, and it's not like you could change the amount or the source address or the destination address, but you could change the transaction enough to where layer 2 solutions, like things like Lightning and other interesting things that would be built on top, couldn't easily be built on top because there was just a little bit of unpredictability. So it was a security flaw, but it just wasn't a super high priority security flaw for a long time in Bitcoin. It eventually got fixed with the SegWit release, and it actually had some interesting side effects of fixing this. One is that there was a way that that miners could pretend to be doing work. They could essentially fake proof of work by, let's say, 15%. I don't know what the exact percentage was. And the problem with that is that the whole point of proof of work is to prove that you spent, say, $100,000 on electricity or $3,000 on electricity. If you didn't actually spend that amount, you spent 15% less, then you have an advantage, and you've also deceived the network in how much it would cost to attack it. So it wasn't good, but it wasn't a deal breaker. It was kind of a known thing. It really came to a head with SegWit2x and Bcash because some people, we believe, were exploiting that flaw and taking advantage of that, and it was making their business much more profitable. So implementing that security fix would have prevented them from profiting as much as they were by faking that they were doing work that they weren't doing, that gave them an advantage over the other miners that they were competing with. And so when that security fix got implemented in Bitcoin, Bcash popped up. And Bcash was a copy of Bitcoin that increased the block size to a dangerous level and did not include the transaction malleability security fix. And it's had a good run, but I think, like I said, security flaws are eventually exploited. Everybody knows that. The game is just how much dumb money can we get between now and then.
Yep. Good points. Okay, let's move on to Ethereum and talk about how, I think they're quite centralized and their monetary policy is very uncertain. And also there are not that many full archival nodes running on Ethereum. So did you want to comment on that?
Yeah, there are so many problems with Ethereum that I couldn't even do it justice. But it's like EOS or anything else, right? Like they have done an excellent job on marketing. They had the most beautiful website that probably any cryptocurrency has had. But they didn't spend a whole lot of money on actually designing a secure system. And that's because I don't think they ever thought that they could. They've always been very clear that they do not want to be compared with Bitcoin. They want to say Bitcoin can be money and will be smart contracts, or Bitcoin can be money and will be the world's computer. That's not an accident. It's because they know that if people can see clearly that it is a head-to-head competition and they have any level of technical depth, they're not going to believe that Ethereum is going to stand up in the long run. So instead, they try to make it seem like they're not competing at all. Now, the reality is they are competing because a smart contract is only useful if it's built on top of money. Or another way to say that, at least, is that it's a whole lot more useful if it's built on top of money. So if I could write a contract with you that says, I'm gonna do X, Y, and Z as far as labor goes. If I get 50% done, I get this payment. When I get to 100%, I get this payment. If my performance is at this level, I get a bonus, right? That would be a smart contract. Now imagine writing a smart contract like that, but the payments are not in money. That's not nearly as attractive, right? It's not nearly as useful.
Yeah.
So the reality is that smart contracts are a really cool concept. They will eventually be used broadly. And in some sense, they are used broadly now between multi-signature wallets and the Lightning Network, which are both smart contracting systems, or systems that use smart contracts to be possible. But Ethereum was able to make it seem like Bitcoin was slow and not making progress. But really, at this point, I think the jig is up because the simplest smart contract, and for many months, really, it's been up, because the simplest smart contract is a multi-signature wallet, right? Where you have, or a multi-signature address, where multiple signatures have to be applied in order to move funds. Well, you've been able to do that in Bitcoin for a really long time, but you cannot currently do that in Ethereum. There was a lot of multi-signature wallets that were full of this frothy ICO dumb money. And the guy that actually wrote the programming language, I think it's called Solidity, on top of Ethereum, wrote this wallet, right? It is the simplest smart contract you could create. And it was so riddled with security flaws that after, I don't know, $10 million had been stolen, everybody had to pull their money out. So there is no smart contracting on Ethereum. Meanwhile, on Bitcoin, we have had multi-signature wallets for quite a long time, or multi-signature addresses or transactions or whatever. And also now we have time-locked transactions that allow us to create something like the Lightning Network. So smart contracts are good. They're moving forward. Ethereum never had a chance of being really useful, but again, did a great job marketing and definitely sucked in quite a bit of dumb money.
Yeah, good points. Good points. Agreed. All right, let's now proceed to the next level of altcoins. We've got the privacy coins. So I know you had an interview on Monero with Fluffy Pony, who is the lead maintainer. One of the main comments I think we can say about Monero is that it's not scalable. They took some technology that is interesting, but then it just cannot scale to the level that Bitcoin can. Did you want to comment on that?
Yeah. So, I mean, I've talked a lot about Monero. It's probably the thing that has got me the most flack because the thing about a lot of this stuff, a lot of multi-level marketing or just flat out Ponzi schemes, part of the reason they're effective is that people don't want to believe that they've been screwed over. They don't want to accept the fact that they've been ripped off. So if you have invested in a Ponzi scheme, you would almost, in many cases, rather just lose your money than go through the mental anguish of recognizing that you've been had. And that maybe, and this is the most painful part, that you were complicit in having people that you love and care about being had as well, right? If you can get somebody to buy your scam, that's step one. If you can get somebody to suck in their friends and family into your scam, that's wonderful, because now you have somebody that is very deeply invested and will struggle psychologically to accept that they have actually harmed the people around them that they care about. So you've actually created this wonderful sort of insulation barrier between you and the victims, right? And it's almost a Stockholm syndrome thing, like the victims are on your side. So the problem with talking about something like Monero is that, especially in the Bitcoin community, it is sort of the most, or it's the least hated altcoin, right? Fluffy Pony is a very attractive character, very gregarious and fun. He's done some brilliant marketing. I mean, the guy says that he doesn't market, but he is the best marketer in the space as far as I'm concerned, because he has been able to appeal to the smartest people and suck the smartest people into his scam. The problem is that this is a game about creating money, right? If we were looking at a bunch of startups and they were trying to ship out pet food to customers, you could say, maybe pets.com and mypet.com will both exist and they'll have, 60 and 40% of the market share. But when you're talking about money, it's a winner take all proposition, right? It's like an internet protocol where it's so much more useful if we all get on the same page, or a language, right? It's so much more useful if we all speak the same language that we're going to end up with a single global money. And there's a little bit of economic science that you'd have to study to really believe me when I say that. But because of that, it doesn't really matter, even if Monero was able to have a slightly better privacy experience, which is very, I think, arguable at this point, partly because there's so few transactions that happen on it. I certainly wouldn't recommend anybody use it for secure transactions, because if I was part of the surveillance apparatus, I would focus a lot of my energy on that. With very few people moving in and out of Monero, I think it'd be very easy to figure out what's going on. But the other issue with Monero is that, like you said, it doesn't scale. And since it doesn't scale, in other words, you could never use this as money, what are we doing here? Right? Like, it doesn't matter how private it is if it could never become money. Because what's happening right now, and I think a lot of people don't understand this, is that if you are investing in something like Bitcoin or Monero or Grin or any of these other coins, what you're doing is you're investing in a technology hoping that it will be adopted as money. Because if it's never adopted as money, it is just a set of ones and zeros that's useful for nothing else. So if it can't become money, and you're investing in it and it's purely digital, what are you doing here, right? So that's really the problem with Monero, and I think it helps illustrate the problem with a lot of these things.
Yeah, got it. All right, and we'll just in the last few minutes, we'll hit the last one, Zcash. And so I guess some of the opening comments I'd put on Zcash are that there has been some recent research done by the University College London, where they were able to de-anonymize certain addresses. And I think what it's getting at here is that in Zcash, not every transaction is in the shielded pool. So some transactions are in the normal set. And what they were able to do was find that the number of people because the number of people weren't kind of using the anonymity functions by default, then the ones who were using it were somewhat able to be de-anonymized. And this relates to the addresses used to pay the shadow brokers who were also responsible for releasing the WannaCry exploit. And also, I think Zcash also has a bit more kind of quote-unquote governance, which might also be worth a comment as well. Did you want to comment on that, JW?
Yeah, I think Zcash is it's kind of funny because I like to try to when I can create analogies of other sort of technologies. So if you can imagine being in a boardroom and somebody comes in and they say, "Hey, we're going to create this new solution, and it's going to compete with the big competitor, right?" And what we're going to have to do is we're going to have to introduce this massive amount of trust. Because you're going to have to trust that when we set it up, we do it honestly, right? The users are going to have to trust this. And when we're done, the advantage that we're going to get is that if you opt in, you're going to get a certain feature. Now, we can't actually give you that feature by default because it's so inefficient, like it would never work. But if you trust us to set it up, then we can give you this feature that maybe if you use it, which you can't use it normally, but if you choose to use it, could provide you this benefit. You would sound like an absolute madman. And if you then said that the thing that we're building is digital money, you would sound like 10 times the madman. Because there's no way that if you're trying to create a digital money that's going to compete with Bitcoin, that is designed specifically so that there is nobody that you trust, right? That's the whole idea of cryptography, is you assume everybody's an attacker and everybody's evil. And if you're going to take it to the point of actually being money, which is the most critical thing to keep us all alive because it's the glue and the fluid of the economy, and then you're going to say, well, we're going to make it so that you have to trust that we set it up properly. Otherwise, we can silently create more money and steal all of the value of your money. And the benefit for that is a feature that sucks so bad it has to be turned off by default. Like, this is absolute, this is nuthouse stuff. But if, again, if you're marketing it to a bunch of people in, South Korea that don't speak English and can't probably even understand what the heck this technology claims to be, which is where a lot of this dumb money came from, or, the guy that works at the grocery store that heard about Ripple and is now really excited about this new privacy coin, but has no technical knowledge at all, then you can make something that works. But I really think that if you see it in that light, you can see why I have just such disgust and disdain for this. And it's really unfortunate with something like Zcash because there are respectable people associated with these projects, and it's just disappointing to see that because they're they've sold out their reputations for a few pieces of silver, and this is a short-lived scam. I think it's got maybe 3 or 4 years of legs on it at most.
Yeah, good points, JW. Okay, well, I think they're basically the key points. I suppose to summarize and just kind of wrap a nice bow around this, we would say, you've got to pay attention if you're new to this space. You've got to pay attention to the network effects and pay attention to what is really something that's, scalable, makes economic sense, has the right network effects around it, has the right developers, has the right incentives for, people to buy it and hold it. These are all things that we have to consider when when people are when they're trying to learn about cryptocurrency and understand why Bitcoin is special. So hopefully in this episode, JW and I have been able to explain that to you guys. And I suppose now let's just, where can everyone find you, JW? Your Twitter account is at WeathermanIam. And also if you wanted to chat about MathBot.
Yeah. So let me just kind of respond to that last comment as well. I realize that most people that have listened to this episode, they're at this point, I know, because I've tried to communicate these things on Twitter. I've tried to communicate these things in 1 hour podcasts for a little while now. I know that there's many people that have heard this that just don't buy it, that don't quite understand, for example, why money has to be one thing, that see that there's competing monies in the world and think that that will continue, that assume that money is like other technologies where, competition is generally a good thing, right? So at this point, what I've ended up doing is creating a class that I teach, and it's 8 hours. It's very intensive. It starts at the basics and works all the way through the economics that you need to understand and the technology that you need to understand to at least avoid 95% of the garbage that's out there. Eric Lombroso comes in and does a 1 hour talk on the technology, and Saifedean Amos comes in, the Bitcoin standard guy, and he does a 1 hour talk on the economics. But I guess what I want to say there mostly is that it's okay if you don't believe me. I understand at this point that it requires a lot more work than I can do in a 1 hour lecture. But I would recommend that at least you take seriously the possibility that what I said is true and investigate it.
Yep. Great points. Okay. And is there any other projects you'd like to speak about at this point, JW? Or?
Yeah. Thanks again, man. Thanks for giving me a chance to plug MathBot twice. So the thing that I spend most of my time working on right now is mathbot.com. So go check out the website, mathbot.com. It's basically a game that allows you to learn math by programming a robot. It's great for basically anybody between 5 and 95. And so if you're thinking about maybe changing your career and going into programming, or if you've got, a 7-year-old kid and he's struggling with math, especially if he thinks he's not good at math, that's exactly who I care about most, because all kids are good at math. They're just rarely taught it properly. Check it out, and then give me feedback. You can hit me up at WeathermanIam on Twitter and let me know if there's a bug, or if it was fun, or if you're stuck. So you can pretty much get some pretty good free math tutoring out of me and programming tutoring out of me at this point, because it's early. The application is still in beta. We're still building it. So there'll be little bugs here and there, but in exchange for a little frustration, you'll get a lot more attention from me and the other folks than you will when it's all polished up. So check out mathbot.com and let me know what you think.
Excellent. So, guys, I will put a show notes page on my blog. Go to stefanlivera.com and search SLP4, and that will be the episode here with JW, and I'll put some of the links to the points that we've discussed, and I'll also link to WeathermanIam, which is JW's Twitter, and mathbot.com. Otherwise, thanks very much, guys, and have a great day. See ya.